Hi, I am Anna. I come from www.ntvforex.com. Dividends to lag behind earnings. Don't expect a phenomenal payday anytime soon. http ntvforex.com News ID EF808E 7/15/2023 51:21 am. Australian dividend investors are likely to have a struggle in this upcoming earnings and dividend season in September. Forecasts suggest that this will likely be the worst cut in at least a decade, with a number of entities planning to cut, postpone, or simply cancel dividend payments, including the big fan favorites within the S&P/ASX 200, with more than a third of the top 100 cutting, postponing, or cancelling payments in the earlier earnings season of 2020. A similar outcome is expected this time around. It is a depressing reminder for many investors that there is still a level of risk, even in revered markets known for having outstanding returns historically. It is worth noting that while some equity markets do hint at a V-shaped recovery, the wider economy does not share those same results, and dividends will lag behind earnings, so don't expect a phenomenal payday anytime soon. The data so far suggests a fall between 30–40% in dividend payments on the previous financial year, meaning the figure is between $24 billion and $32 billion as a current estimate. With the new lockdown imposed in Victoria, there are likely to be further revisions before the X dates as a defense of cash flow. Still, there are some outliers. Some mining entities have been well placed to weather the pandemic, due to support from above-average commodity prices. Iron ore producers should have a better-than-expected outcome, with the greater-than-normal demand for steel in China, with outputs up 4%. The demand argument aside, iron ore prices have risen 30% in the last few months, with prices resting in the $107 T range, and considering the cost of production is in the $13 T range, then profits should be substantial considering the current economic landscape for ASX-listed entities. I would not be surprised if we are to see a decline in the ASX 200 in the near term. Having this many listed companies either not providing or offering limited advice does not speak well for the likelihood of dividend payments. The current price in the ASX 200 reflects on this as well, with price struggling to get past the pain point of $6,200. S&P/ASX 200 15/07/2020. Regardless of this, my eyes are going to be firmly focused on iron ore producers such as Fortescue Metals, BHP, and Rio Tinto, with the occasional glance hovering on Big Four offerings. Subscribe our channel to receive the news as soon as possible. Thank you for watching.